Welcome. It's another episode of the Zero to Funded series, the series where I basically guide you with all the concepts and the strategy basically to actually get you funded and all of that stuff and basically make you profitable. So in this episode, we're looking at supply and demand. Now, this is another technical analysis concept, and you've definitely heard this around the trading industry because it gets, spoken about quite a lot. But what is it and what do you need to know basically? Because there's so many different things in supply and demand, but today, I'm going to be basically explaining everything that you need to know and removing all the fluff, removing all the unnecessary things that, like, it can help you, but this is the basics. This is all you really need to know and how you'll be using it in the strategy that I'll be giving you towards the end of the series. So if we just look at two trends, we'll look at a bullish trend and a bearish trend. This is our bullish trend and this is our bearish trend. So as you see, when we break structure every single time, and I'll mark that by this, we break structure there, we break structure right there, and we break structure right there, something like this. Okay, so we have three breaks of structures. Now, supply and demand zones come in basically where the pullback basically ends. So this pullback, once it starts pulling back, if it's a bullish trend, then it's going to have to continue at a certain point. But the question is, where is that certain point that it was going to continue? Now, that is where the demand zones come into play. So in a bullish trend, we're going to be looking at demand zones where we're going to be buying from, and supply zones is where we're selling from. So think of it just like S for sell, so supply, and demand, you can't really think of anything like that, but just think of the supply one and it will make sense. So in other words, we're selling from supply zones like that, and we are buying from demand zones like this. Back again with the amazing drawings. So demand zones is basically this. If I had to put it on this diagram, it's something like this. Every time we break structure, we get a demand zone, and that is where price pulls back to, and then eventually continues like that. So in terms of supply, it's the same thing, and I'm going to mark that as red. It's literally the same thing, except it's in a bearish trend. So we'll make this red, make this red. So that's basically supply and demand. Now, what I want to show you, another thing actually, is that a pullback also has to occur. Now, where do those pullbacks, like where's a good probability that those pullbacks could start? That is previous supply zone. So for example, there could be a massive daily supply zone like that, like looking to the left, okay? This is a good area that we might be pulling back to. And then this starts the pullback into a previous demand zone. Maybe it's this one right there. And then we continue going higher. So we could have a new demand zone, something like this. Same thing with when we're in a bearish trend. So if I just drag this there, we could be entering a previous demand zone from the daily 4-hour whatever, and then that is a good signal that, maybe we are going to go up to fill in maybe 50% of this range and then carry on going down. So that's supply and demand in a nutshell. That's all you really need to know. But now I'm going to show you how to actually draw them and some examples. So that's all you need to know. You won't have to look at any more videos after this. And yeah, let's get into it. So if I just go on a daily, trying to find something clean, maybe. Yeah, 4-hour looks pretty clean. So if we just look at this area of price right here, clearly we are forming a downtrend, okay? The same diagram I showed you before, like this. Something like that, right? But how do we draw the supply zones? So supply zones is, we draw them from the last, in a downtrend, we draw them from the last bullish candle before the big down move, which broke structure. So structure was clearly broken there. Okay, but what actually caused this structure to break? It was this last buying movement and then this large drop down. So if we draw it from here, the bottom, all the way to the top, like that. As you can see, it comes up and goes down with some inducement as well. But that's pretty much it. Then if we look at another break of structure, and this is another supply zone, we never got into it. But as you can see, these areas can be very reactionary. I think maybe we touched it or maybe we didn't, but we get a reaction. Now, sometimes you're also going to get liquidated. For example, something like this. This was a supply zone, but as you can see, we went above it. And why did we go above it? Because there's an imbalance, a fair value gap. So make sure to check out the fair value gap episode if you haven't already. But there's a fair value gap right here. So it fills in that imbalance and then goes down. So what I'm trying to say is don't just rely on supply and demand, rely on fair value gaps, imbalances, all these different things, order blocks, and just, pick a few that you've already seen in the series and tailor that to the strategy which I will give to you. So I'm going to basically give you all the tools in a way, right? I'm going to give you a bowl or a box of toys and I'm going to throw it on the floor. And you have to, like move around and everything and figure out which toys you want to play with, okay? So pretty much, yeah, now in terms of demand zones, when we break structure to the upside, such as this, where do we come down to, okay? As you can see, it's the same sort of diagram. We go like this, this, this. So where do we come down to? We come down to demand zones. Now demand zones is basically the same thing as supply, but it's the opposite. So it's the last bearish candle before the big move up. So this would be a demand zone. like this. Okay, as you can see, this was a really nice wick demand zone. So pretty much this was the last actual demand zone, but it's already come down into it and mitigated it. So the last area of last, the last sell before the buy is right there. We come down, literally tap it, and then carry on going up, breaking the high in a bullish trend. Same thing here. If you look at fractal structure, we break it there. Where's the last down candle or the last bearish? We have one there that's mitigated. We have this which is unmitigated, and it can come down, give us a reaction. But that is how you draw demand zones. And just zoom out on price, 15-minute, 4-hour, whatever. You'll see these happening every single day, and the more you look at them, the more they'll just become second nature to you, and also you can use them. So the way I like to use it is actually, if we're in the Asian session and I'm looking for buys, then I'm basically just looking for a move below the Asian low and then a move up. But that move down has to tap into something, relevant or significant. And that is where supply and demand zone come in. So if there's a massive supply demand zone like that, then that would give me more confluence that, okay, I've got my entry signal and we're in a big demand zone. So more confluences, and I'm daily, I'm bullish as a daily bias. So all these things factoring in really increases your chance of the trade playing out and gives you a higher chance or a higher probability trade in the long run. So I didn't take this trade, but I was looking at it and it was a really nice trade. New York session, didn't get anything in London today. So I was just looking at New York and we had this large move up. So if we get our retracement tool, we can usually expect a retracement around the 50% or this golden zone as people like to call it. But what I saw was a lot of liquidity building up right there. And then we have a really nice demand zone right there. And what did we do? We came to New York, tapped it. We go on the 1 minute. You could have taken a nice entry. So this is actually the New York kill zone too. So I've already made the kill zone video, but a fair value gap forms within that time. So what's that, 2:18? This is UK time currently. So you could enter off that. And if you kept it right there, yeah, you'll get stopped out. But who's going to have a 3.7 pip stop? So maybe increase it there to like an 8 pip or maybe a 5 pip or something. I like to keep it 7, keep it 8 for that. And then, 1 to 2, which would have easily been hit. So that was a trade idea. But as you can see, this is how powerful supply and demand zones are. So really figure out, see what works for you, see what you relate to, because at the end of the day, my strategy, like the exact way I trade, isn't going to just replicate in your trading. So as I said, pick your toys wisely and stick to those toys, okay? Don't look around for other toys and everything like that. It's a really good analogy, by the way. But anyway, I'll see you guys for the next episode. What do I always say? Happy trading. Stay safe.